Hi, my name is Samir. I'm Chief Product and Technology Officer at Hashtags. What we see now in the digital assets market is basically a conjunction of three major waves that are causing a negative sentiment. The first one is the macro environment. So we see in a macro environment with a lot of uncertainties, a lot of risks, inflation in the US and how the Fed is responding to inflation. This is causing a major risk-off movement on major assets like equities and especially crypto in that case. The second wave is the cyclic nature of new technologies. So new technologies, they evolve in waves of excitement and hypes and then disillusionment and fear. And this is what we've seen in crypto since 2010. This is what we saw in the internet. So this is very normal for new technologies to go through cycles of excitement and then disillusionment. And the third wave, which is a more short-term one, is the liquidity crisis we're seeing in the crypto markets. And this is caused by excess of leverage, lack of risk controls in some of the players. And this is pressing the crypto prices down because you have some waves of liquidations. So you have large sell pressure in the market in the short term. So what we expect in the market in the short term is a lot of volatility because of those three factors. But the important point to highlight is that the fundamentals are still stronger. None of those three waves impact the fundamentals in any significant way. So we're still very positive about the outlook for crypto in the medium to long term. We are keeping an eye on basically the solution of those three waves. On the macro side, we're looking for signs of less uncertainty or less geopolitical risks and controlling inflation in the US. On the cyclic nature of the technology, we're just tracking the maturity of crypto adoption, tracking the evolution of the projects like Ethereum's transition to proof of stake. Regulation across crypto and stable coins will be very productive and will be very helpful for adoption. So it's also one interesting point to keep an eye on. And last, for the liquidity crisis, we're also tracking how this deleverage is working. So some players may go bankrupt, more liquidations can come, but we think that probably in a few days or few weeks, this can be solved. Stablecoins are one of the most interesting use cases for crypto. They allow you to make instant settlement and payments 24 hours a day, 7 days a week, cross-border, so it's a very interesting use case. When we're talking about stablecoins, there are basically three types of stablecoins. The stablecoins that are collateralized by fiat currency, the ones that are collateralized by crypto deposit, and the others that are called algorithm ones. The last one, these algorithm ones, are the most, I would say, risky. Because they're not proven. And this is what happened with Terra Luna and other currencies that are under suspicion. I would say, like, what we learned so far is that it's very important to be diligent about the stable coins you're using, and also that regulation can play a long way in helping those stable coins applications to thrive, right? So if we had a regulation in terms of how the deposits of stablecoins are managed, we can bring less uncertainty to this market. So we think over time, the maturation of this technology, so people testing this out, so bad players going out, and also best practices coming out and regulation coming out can be very helpful for stablecoin adoption. Investors and users of stablecoins should be very aware of the risk factors and the experimental nature of this technology. They should consider that and remember that there's no free lunch in this market. So if you're interacting with a stablecoin and a money market protocol or a lending agent that is offering a very high yield, like 15%, 20% on your US dollar deposit, you should be careful about the risk factors. There's no free lunch. So this is the first advice I'll give to investors. Be diligent about your investment, and also keep in mind that this is a very experimental technology. Crypto is one of the most interesting technologies that we've seen developing the last few years. So we're still very optimistic about its future potential, and how it can create value for our society. So what we normally say to investors is that they should approach this the right way. They should approach this with as a strategic investment in their portfolio in a diversified way and looking for long-term time horizons. Right? During those downturns in the market, it can be an interesting opportunity to start allocating if you never allocated, or if you already have position, to consider doing a dollar cost average on that. So this is the kind of technology that we need time to develop, to mature, and for its value to unfold.